Good morning, everybody. This is the live market open for Friday. Happy Friday. It's May 6th. It's been a long week. I'm Yohay, Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Rate. Good to see Fabian in the room and quite a few others. So as usual, today we'll cover recent developments in markets, talk about various charts and levels, and the next, less than 24 hours, but we have, of course, the big non-farm payrolls, which will have an impact for much more than 24 hours. And of course, as we always do on Friday, we'll preview the next week's events. Okay. If you cannot see the chat box alongside the screen, please go to the address right here, tlk.io/fxrate-forex-live-video. Okay, so what's going on in markets? The dollar remains strong. It gained more ground, especially against commodity currencies. Okay, we'll talk about that. We have a specific move in the Australian dollar. Stocks are not looking that great, sort of wobbling around, leaning lower. Also, oil and other metals such as copper, related again to the Australian dollar, are not looking that great. And of course, with some markets, we are seeing tension towards the non-farm payrolls, for instance, euro dollar, and the ranges are a bit more limited. Okay, so before we talk about yesterday's events, let's go over the charts. So euro dollar, just said it's not going anywhere fast. It's about 10 pips higher on the day. It did make a small move after a very sleepy Asian session, but climbing back above 114, basically hugging this level. I still see resistance there at 114.10. Further resistance, 114.60, 115. We made a big move all the way to 116.16, only to crash back down. Further support at 113.35. Okay, I believe we'll have more tension around this currency pair until the non-farm payrolls, and then we'll have wild action. All right. The strength of the dollar can also be seen, and the tension towards the NFP with pound dollar. Okay, we had elections to the mayor of London and Scotland and Wales and other areas in the UK, sort of second-tier elections, if you wish, not the general elections. Analysts are still debating about what the results were. If Labour did okay, the Tories did okay. I know that at least in Scotland, the Scottish National Party had a landslide victory. Luca, good morning. You see the Asian session video. Okay, I hope maybe a refresh can solve that. Oh, actually, you're not hearing me. I'll write it down. Anyway, so I hope the rest of you can hear me. And anyway, with the elections, I don't see an impact of these local UK elections on the pound. I think the analysts are still trying to understand who won and who lost. I only got the message that the Scottish National Party had a big time win in Scotland. The rest of the results, whether it's positive for Labour or for the Conservatives, had a better night over there. Anyway, the big focus is on Brexit. Pound dollar 144.40 at the moment is support, and 145.10 is resistance. Also here we have a narrow range ahead of the non-farm payrolls. Further support at 143.70, resistance 145.80. Okay, dollar yen a little bit higher. We did see some US dollar strength. That means we went higher yesterday, and now we're a bit sliding, dipping under 107. I don't see 107 as a really strong line. Okay, so Fabian, thank you for trying to help out Luca. Try to enter from the webinar page. It could make things easier. Anyway, 107.65 is resistance. 106.10 is support. Also, dollar yen is waiting for the non-farm payrolls. Often we have a very strong reaction not strong, the correct reaction in dollar yen to the events related to important US events, US releases like today's non-farm payrolls. Okay, dollar CAD, here we see a clear trend. Trend is up, that means negative. Okay, look, I'm glad to have you here, that it's working out for you. Anyway, talking about dollar CAD, we did manage to settle above that 128.30 line, and now we're moving higher. 129.30 is resistance ahead of 130. Support, strong support at 127.50, that's the clear separator of ranges. And to the downside, we have 126.30. The Canadian dollar suffered a weak release of the Canadian building permit yesterday. It just added fuel to the fire to the general US dollar strength and to the fall of oil prices. So oil prices, I would say, they're still relatively high. They're trading in the high range, but they're sliding towards the downside. 43 works as support. We're still not there. 43.25 works nicely as support, sort of cushioning the pair yesterday. We're currently above this line on WTI crude oil, but the trend seems this black gold, the energy commodity, is leaning to the downside. Okay, together with stocks, together with other stuff. Okay, so yeah. There were reports also yesterday that Saudi Arabia changed its total attitude towards oil. It sees the world moving on to other energy sources before the supply of oil is gone, so it's not so scarce, and it's not something. It's better to sell as much oil as possible now because its price in the future will fall anyway. This is, of course, a very long-term vision, and it's been reported, from sources, not something official, but it just adds, this report adds more pressure on the price of oil. Okay, and we're seeing the Canadian dollar moving to the downside and the US dollar gaining ground. But in the Aussie dollar, we have an even stronger trend. It's quite a bad week for the Australian dollar. We did have on Tuesday a rate cut. It wasn't a huge surprise, okay? It was sort of 50-50. We had terrible inflation figures, and then with the terrible inflation figures, we had expectations for some expected rate cut, some did not. Okay, the Reserve Bank of Australia went for a rate cut. It sent the Australian dollar down. Then later this week, I think it was yesterday, we got some good figures from Australia. Trade balance came out better than expected. Retail sales came out better than expected. We had this recovery, but it wasn't long-lived. It was short-lived. We had tonight, we had a report from the Reserve Bank of Australia. Their forecasts, their projections, they lowered inflation forecasts from 2 to 3% to 1 to 2%. Okay, so it's a significant downgrade of the range, and this hurt the Australian dollar quite hard. We also learned this week that the next governor, Glenn Stevens, the current governor of the RBA, is finishing his job, of course, as planned in September, and his successor was announced this week. It'll be Dr. Philip Lowe, Lowe with an E. Of course, you can have lots of jokes. The Australian dollar is going lower ahead of low and things like that. Anyway, let's look back at the chart and see that this is quite a significant move. We're currently at 73.63. We already reached 73.60. We're at the lowest levels in quite a few months because we had higher ground here. So we're currently at the lowest, well, since March. It's not that devastating, okay? But it's a 2-month low for the Australian dollar. We had a shoot higher around these levels, gradual climb all the way to 78.40, and now we're going back down. I see significant support only at 72.80, okay? If these levels are confirmed, if we do have an okay US non-farm payrolls that continues pushing the Australian dollar lower. Now, with what I said about the Australian dollar, about lower inflation forecasts, We're expecting, of course, a further cut. Expectations for rate cut in Australia have been brought forward to as soon as the next meeting in June. And this, of course, raises the question, who's next? And, of course, the immediate suspect is the New Zealand dollar. But the New Zealand dollar is going down, yeah. So it's been sort of swept away by the Australian dollar. Not as sharply, not as strongly. Currently, it's 68.38. So we are down on the day. Further support here at 68.20. We're getting close to that number. This level worked to support late in April. Resistance at 68.80, a bit weak and more significant at 69.50. Remember, we had a double top here on Kiwi dollar at 70.50. Yeah, so the Kiwi dollar is not looking that strong. Okay, dollar Swiss once again reflects very nicely just sort of the US dollar. So US dollar is stronger, and now waiting for the non-farm payrolls. This is exactly what we're seeing also on the Swiss franc. In the Swiss franc specifically, yesterday weakened even more. I always suspect the SNB, but of course I have no proof. Doesn't look like that, but anyway, 96.80 is the current level, just under 97 on dollar Swiss. Next level of resistance is only at 98. Okay, support 96.40. Okay, Euro Swiss, as I mentioned, we did have a move to the upside above. The pair was hugging. This cross was about flirting with 110 for quite some time. Now it did move to the upside. So this is weakness of the franc more than strength of the euro. At least we're seeing some moves. Well, this morning a bit less, but at least yesterday we had some moves. Currently it's a 20 pip range. Where's the next level of resistance? I would hazard a guess. Yeah, oh, we have this line from, I would say, this is a better approximation right here. 110.60, so we're quite close to that line, which worked as resistance back in February. Okay, so in Euro Swiss, we're relatively high levels. Euro Pound 78.93. We had an attempt to break above the 79.30 line, which kept the pair so many times and also worked as support in the past few months. This didn't work out. We're back to the downside, just under 79. Support 77.40, and before that 78.30. Both currencies are currently waiting for the non-farm payrolls. I don't see one having an advantage over the other. So this morning we are seeing the euro beating the pound, but it's not anything significant. We hardly have any figures. Yesterday we had yesterday we had weak UK data that perhaps weighs on the pound, but I don't see it. But also the euro is under some pressure. So yeah, let's continue. Euro yen 122 is the current level. This crash right here is the big Bank of Japan disappointment when they did not introduce new stimulus 1 week ago, and then we fell all the way to support at 128. 66, 65, that's a double bottom. Since then, we did have some kind of recovery, and now we're wobbling around. Let's see what happens today with the non-farm payrolls. If we have a terrible non-farm payrolls, we could see the yen strengthen against the euro because the yen is the ultimate safe haven currency. But it needs to be a real disaster for us to point out risk on, risk off. Okay. And pound yen, our last currency for now. I see some questions. Pound yen is sliding now, a stronger yen against the British pound. So 154.60 something. Support at 154. Resistance 155.80. Relatively narrow range, but for this wild cross. Now we're seeing the pair, this cross slide just a bit. Okay, Dragon looking very vulnerable once again. NFP can trigger a huge move to 102. Euro Japanese yen to 102, and the Dragon all the way to 148. if Brexit polls get worse, even 140. Yeah, the pound is vulnerable in the yen. Remember that the Bank of Japan would like to intervene, would like to hurt, to weaken the yen, but they will not do it as long as the yen looks strong, as it has momentum. They'd rather act with the trend. With dollar yen, you say the USD yen, 102. 102 is a bit far out. I think that traders will hesitate at around 105 because you might expect the Bank of Japan to intervene over there. And anyway, at the moment we're 200 pips above. But maybe a long-term move with the strength of the yen as a safe haven currency. Yeah, and against the pound, it has a better chance. The pound is vulnerable. The pound had its time in the sun, rising a bit, but not. But the reality is that the UK economy doesn't look that good. I mean, the trend isn't that favorable anymore, and the danger of a Brexit in 6 weeks' time is with us. Okay, it is also major fib retracement and could continue up. Okay, let's share the chart with everybody, the chart that Luca shared with us. Yeah, that's the chart of the dragon or the Gepi, pound yen. So we are seeing it trend lower. Thanks, Luca, for the chart. It is sliding alongside this trend line, and the Fibonacci retracements, as you say, point to even lower ground. Yeah, very strong support there at 139. We've seen it, work here as resistance, then right here as support for quite some time. And also this line right here, 148, which you mentioned, looks to work as very strong support, a very clear separator of ranges, working at first as resistance, later on as support before the pair went up. So we did have this kind of nice trend here of the pair moving to a higher level, trading in that range, then rising once again, settling until moving higher. That was, in previous years. Now we're seeing a change of trend and fall back down. Okay. Yeah, see how your chart is. So, there is more potential to the downside here. Safe haven yen flows and Brexit fears. I don't know how much Brexit is real. Polls are very close. And the conventional wisdom is that the undecided will go for remaining in, but you never know. Okay, so thanks, Luca, for the chart. Thanks for sharing right here. We talked about all the currencies. Just another look at euro dollar. More of the same, where we've seen it beforehand. Let's talk about some events we had yesterday and then preview the big event for today, which I've talked about so many times already, mentioned so many times, the Non-Farm Payrolls. So yesterday we had UK services PMI, disappointing with only 52.3 points. This reflects weaker growth in the services sector, the most important, the biggest sector in the UK. It's the third consecutive disappointment. We had 3 PMIs, all of them missed. Okay, another sort of a week of bad news for the pound that weighs on the pound and sort of fits in the picture of a stronger US dollar against the pound as well. Canadian building permits, as I mentioned, they disappointed by falling 7%. Not such a big deal, I mean, because it's a very volatile index and it's not a top tier one, but with slightly weaker oil prices and stronger US dollar, it sort of pushes dollar CAD higher. Also in the United States, we had disappointments. Jobless claims went all the way up to 274. If we look back a few months, it's okay, but in the past month, we had much better figures, much lower ones, so it's disappointing. We had a few Fed officials talking yesterday. Bullard remained optimistic as expected. Williams sees hikes, 2-3 hikes this year, okay? But Lockhart, which used to be more hawkish, more optimistic, is on the fence for June. Okay, one of the reasons cited for this USD strength this week, for the turnaround Tuesday, for the strength in the US dollar was that Fed officials are talking once again of a real option in June. I want to remind everybody, these are not the top ranking Fed officials. I would have agreed that they have influence, but in the past we've seen how the same guys talked in a bullish manner about raising rates, and then only to be followed by Yellen and also by Dudley saying that, showing much more dovish words, including in recent rate decision, where they did sort of tip their hat, Yellen and co, to optimism, but did not seem in any rush to raise rates. The Fed is looking for excuses not to raise rates, okay? We've seen that just too many times. There still is an option of June, but you just need the excuse of the danger of a Brexit, and the vote is 1 week after the Fed decision to dismiss a rate hike. No, I'm not saying if we have an excellent NFP today, if we have an excellent NFP next month, if we have good retail sales, upgraded growth forecasts, you name it. If everything looks shiny, the Fed will go for it. But at the moment, I side with bond market expectations, which show us a very low chance of a rate hike. Okay. Anyway, just look at the implied probability. This was yesterday, 15%. I'm refreshing the screen. Yeah, even lower, just 10% chance of a rate hike. Okay. Yeah, and we talked about the RBA. Before we talk about the NFP, I see a few comments here. Yeah, Luca and Fabian are talking about the pound yen, 148 major pivot points in the dragon. 140 comes to play for Brexit gets real. Yeah, major reversal. Yeah, okay, I agree. What's your bias on the yen and going and why? I don't see stronger yen going into the summer while I see pound due to recover. Yeah, I do see the pound recovering once we don't have a Brexit, assuming the Brits vote to remain in. I think we could have relief rallies. Markets really love certainty, hate uncertainty. And the yen is also, I think we could, well, assuming no Brexit, assuming that at some point the yen stabilizes, we could have the pair going up and up and up, but not until we have clear, I mean, the Brexit debate is over, the vote, the referendum is over, okay? But if there is a Brexit, it's also good for the yen because it's a risk-off event, okay? So if we have a Brexit, we could have an even deeper plunge, okay? Today I am, well, I don't have a specific, I think it all depends for the yen on US figures. If the non-farm payrolls is better than expected, it's good for the dollar, bad for the yen, and the other way around. Only if we have a terrible NFP, sort of working as a negative sign for the whole global economy, then we could have the yen strengthening. But if it's a small miss on the NFP, it's good. Well, yeah. Also, in both cases, it's more a dollar event. I don't see a rate hike before December. Yeah, I also think that the Fed will wait for after the elections. Will not anything after June will be considered or could have some kind of an impact on the elections. Okay, Lucas sees no Brexit, but the worrying that is, despite all the scaremongering, polls are not moving. Yeah, the uncertainty towards the vote has an impact on investment, but yeah, yeah, Brexit in June, elections in November. You may dismiss them, but they still point to a possible bad outcome, which will have to be priced in some way. Yeah. Yeah. Okay. Let's continue with today's big event. Non-Farm Payrolls, first Friday of the month, released at 12:30 GMT. FX Rate has a special 10-year anniversary broadcast with Wayne McDonald. I suggest everybody to watch. If you're trading it, it's a 3-hour webinar. Anyway, jobs, the headline figure in the non-farm payrolls, we're expecting a gain of 203,000 jobs. after 215 last time. This is in line with the averages we've seen in recent months, the sort of holy grail of 200,000, a bit above, a bit under. If we have around this number, I would say between 170 to 230, the focus will shift very quickly in a matter of milliseconds to wages. Wages are gaining more and more importance in recent months. Another repeat of last time is expected, 0.3 month over month and 2.3 year over year, okay, which is okay, but not showing any kind of inflationary pressures. At least it's at the higher end. Okay, we would need something like 2.5 or higher, or even 2.7 to be really bullish, to show, okay, not only is the US economy gaining more jobs, but these jobs are already creating price pressures. Price pressures mean more inflation, and we could see the Fed getting closer to a rate hike in June, which currently seems improbable. But if we have less, and we, of course, 0.2 month over month, even if we have only 2.3 or 2.2, or of course below, it could be a disappointment, and we could see the dollar slip, and the no hike camp will celebrate, or we could see a cementing of no hike in June. Okay, the unemployment rate is an important political headline, but not so much for markets. It's expected to remain unchanged at 5%. It's a very low level. It already dipped to 4.9. It did rise to 5% last time because of a rise in the participation rate. So maybe the political headline was negative, a rise in the unemployment rate. But for markets, we know that more participation, more people working is good news. So markets are focused on wages now, even more than the headline, and of course not on the unemployment rate. Okay, regarding expectations, last minute expectations, we have I would say no change, because ADP did miss on expectations, came out at 156,000, but the ISM employment component of the non-manufacturing PMI, of course, which is the services sector, came out a bit better than expected. I would say everything is balanced. So what you see on your calendars is the real expectation, because sometimes, forecasts are built, forecasts are made, numbers on the calendar are already a week long, and during the build-up to the non-farm payrolls, we could have changes. But specifically this week, we have all the data out, and it's quite balanced. Okay, what's the bias going into the non-farm payrolls? The bias is still a dollar strength. Okay, we had a big turnaround Tuesday after the dollar plunged to new lows against the euro, and also against some commodity currencies. We had a big turnaround. This turnaround looks stronger and stronger every day. I would say that an okay non-farm payrolls report, even if it's doesn't convince anybody that a rate hike in June is coming, it would just serve as an excuse to buy the dollar even further. Okay, against the euro, against everybody, the pound, the yen, and commodity currencies which are a bit more vulnerable. Okay, it doesn't mean that the dollar is going to ride on from here to June, and that there's going to be a rate hike. Just that the current trend in the short term, and what we're seeing this week, is likely to continue for at least a few more hours until the close today. We would need bad report, miss 170 or below, and poor wage growth to reverse this trend, or at least halt the dollar's trend this week. We would, if we have a really terrible outcome, which I don't expect. I don't expect anything extreme in general from today's report. Then we could see the yen gaining the most ground against the dollar, and commodity currencies still suffering, not really able to recover, because if it's a really terrible report, it's bad for risk assets. If we have an extremely, extremely positive report above 250,000, wage rises of 2.7, 2.9%, then we can begin thinking about a June rate hike. and that could be very, very positive for the dollar. Again, my baseline scenario is that we have things more or less as expected, and it could serve as another excuse to buy the dollar a bit more going into the close this week, just a continuation of the current trend. Okay, see a few questions here. Another one I wanted to share, ultra exciting times on the dollar index. Reversal from here on bad NFP could be lethal for the dollar breakout and strong NFP, which, okay, let's share this with everybody on the video. Very interesting chart. We're seeing this channeling down on the dollar index. Now we're getting closer to the highs. So yeah, as you explained, if we have a rejection on this downtrend resistance, there's lots and lots of room to the downside. I look a bit less at these trend lines and more just at the linear parallel support and resistance lines, but yeah. But yeah, it's quite a clear trend what you're showing us. Demo account for FXCM. Okay, won't comment on specific brokers. There's one I've priced differently. Yeah, demo accounts are very useful for getting to know the platform, but they don't always show the exact prices, especially with non-farm payrolls when everything goes crazy. Currency. Okay, see. Okay, thanks, guys. So we did a non-farm payrolls preview. Let's talk about other events we have today on the agenda. Not many of them, I must say. Very few, even. We have the Eurozone retail PMI at 8 and 10 minutes GMT. Well, just after the show, it was negative for quite some time. I mean, under 50 points and could stay, so it shouldn't have a big impact on the euro. The Canadian, for Canada, we do have a significant day today. First of all, at the same time of the non-farm payrolls, we have the Canadian jobs report. Let's look at the FX read calendar here on Forex Crunch. And show you what's expected for Canada. So the change in employment, well, it depends. It does change, but anyway, we're expecting a very small change after a huge gain of 40,000 last time. It's only 33,500 this time. And the unemployment rate is expected to tick up to 7.2%. So no big changes in Canada are expected, but we do know that in the past we had a very high volatility. Anyway, dollar CAD is not the pair to trade around 12:30 GMT because there are so many moving parts over there. Of course, if we have a positive NFP in the United States and a weak jobs report in Canada, we could have dollar CAD shooting much higher. But the moves will not be a one-way street. Same thing if things go the other direction. A poor NFP and a strong Canadian jobs report, we could have dollar CAD reverse the trend and fall, a stronger Canadian dollar. But remember also, Canada needs the United States for demand. So a weak United States is not really good news for Canada. Okay, and at 2 GMT, we have the IV PMI in Canada, also quite volatile. It's a sort of a second-tier figure. It's expected to rise from 50.1 to 52.5. We do have the Baker Hughes figures regarding oil. Remember, the number of rigs is not that important. The actual production is more important, and consumer credit to close the day. Well, everybody will already be at the pub, so not that important. But yeah, the big event for today will have an impact, already has an impact on markets, and will have an impact until the close, is of course the US non-farm payrolls. Okay. Dollar index is an index. It's just numbers. To answer your question, there are different indices. What I'm looking usually is a DXY. Okay. Remember, the US dollar index is mostly for historical reasons. it's mostly the euro. Okay, I think 50-something% euro, because in the past Europe had a bigger share in trade. The European currencies, the French franc, the German Deutschmark, the Dutch Gulder, the Italian lira. Anyway, China was a smaller impact on trade, and also Japan. Anyway, it's mostly the euro at the moment. It does reflect the strength of the US dollar, or the weakness of the US dollar, mostly against the euro, less so against the Chinese yuan, less so against, of course, the yen, which is the #3 currency in the world. DXY is what I look at, but there are also alternative dollar indices, which are composed of other things. The advantage with trading sort of one currency up or down is that you have to focus only on dollar strength or dollar weakness, and you don't really care which currency is on the other side. But the actual picture is much more complex if you trade the dollar index, because first of all, you have lots of presence for the euro there. So if you have the euro moving against the markets, let's say the euro is now strengthening while other currencies are weakening against the dollar, then you have things are much more messy in the dollar index instead of making them easier to understand. Okay, and yeah, and there are other indices as well which better reflect trade. Or anyway, I do mention the dollar index. I know that Dale Pinkert is an expert there, so he may have better answers. I prefer sticking to the regular currency pairs. I think the changes, I'm reading the comments here, what changes in different weight can give us various majors. Yeah, talking about complete different prices. Maybe it's priced in different currencies. Yeah, well, I must say I don't know too much. I would suggest you ask Dale. He's really an expert in this. A question from Luca. Do you think the local elections in the UK that have seen more advance of UKIP will fire up more Brexit fears? Also, Cameron seems to be losing London. Yeah, as far as I've read, the victory of Sadiq Khan, if I'm pronouncing his name correctly, of Labour in London was more or less expected. Okay, it's not a big surprise. I think that that Jeremy Corbyn, the leader of Labour, is not really, it doesn't give him extra points for winning London because that was expected. And it doesn't hurt David Cameron too much because it was expected. Okay, regarding UKIP, as far as I've read just before the show, they did make significant gains in Wales. That hurts Labour in Wales and hurts the Brexit case. The non-Brexit case. I'll have to read a bit more. As far as I know, UKIP did advance. The Scottish National Party is the biggest winner of the night. That, of course, I would look at it as a bigger defeat for mainstream parties, the Tories and Labour, than a victory for the pro-Brexit camp. Okay, so UKIP did make small gains, but on the other hand, the Scottish National Party is clearly pro-European, and they won for more seats. So I think these elections are more about punishing the mainstream parties, as we've seen also in Spain, as we've seen in Austria. The runoff candidates for the presidency are the extreme right and the extreme left, as we're seeing also in the strengthening of non-mainstream parties in other places, such as in France, you have the National Front, Marine Le Pen, and also in the United States, Sanders is on his way to lose to Clinton, but he gave up a much better fight than expected. And look what happened. Donald Trump is the Republican presumptive nominee, okay? So I think it's a backlash against mainstream more than Brexit, non-Brexit, okay? More comments here. At this moment, my FXCM demo dollar index is 11,841. Okay. Yeah, different to other DXY charts. Let me show you my DXY chart. I see different numbers there, but It's around 90 something. Okay, yeah, 93.65 at the moment. This is the classic US dollar index. That when I talk about the dollar index, that's what I'm talking about. Yeah. Anyway, sorry I can't provide more information. Anyway, and this is, if you look up in the Trading View platform, it's DXY. Okay. All right. Thanks. By the way, if new news on Dale, is he all right? Is Laura gone for good, or will it restart? I actually don't know. I've been last week on holiday myself, and I'm back. I'll have to ask. I didn't know he wasn't online. I'll ask around. Yeah, DXY. Is it a French or German keyboard with X and Z switched? Anyway, yeah. Okay. I'll try to do some research about the dollar index just to provide a more informed answer. Again, thanks to Dinda. Dale is on vacation. Good to know. I had my vacation last week, not totally disconnected from markets, and now Dale is having his time in the sun. Very nice season in the Northern Hemisphere. Travel in May and come back in the summer. He'll probably be on Monday the 9th. Yeah, okay, great news. So he'll have lots to say about the non-farm payrolls, about the dollar index, and to answer, of course, your questions. Okay, good to know. Yeah. Okay, so it's already okay. It's time for the wrap up for today. Lots to talk about today, which is always fun. We'll do the wrap up for today, and then we'll do the preview for next week's events. Okay. So this is the wrap up for Friday, May 6th. We're seeing the dollar staying strong, especially against commodity currencies, but also made gains against the euro and the pound. Stocks are looking not so great, a bit gloomy. So same thing goes for oil and other metals. There's tension towards the non-farm payrolls. Before the non-farm payrolls, we had yesterday disappointing figures from the UK, once again from Canada, adding fuel to the fire, and even from the United States did not move the boat too much. We have seen some relatively, generally more hawkish leaning comments from the Fed, but bond markets don't buy it, neither do I. That is cited as one of the reasons for the strength of the US dollar this week. I see the strength as a rebound, a necessary correction, not anything else. What we did have tonight is another blow to the Australian dollar from the Reserve Bank of Australia, significantly lowering inflation forecasts. So let's do a quick roundup of charts, starting with the Australian dollar. 73.75 is the current level, which I see as sort of weak support. Further support only at 72.80, hit hard by the RBA. Second time this week after a rate cut earlier this week. Resistance at 74.40. Let's go back now to the top. Euro dollar rising a bit higher above 114.10. It fell under 114.10 and only this morning manages to break a bit above it, but not going anywhere fast ahead of the NFP. 114.60 resistance, 113.35 support. Pound dollar 144.77 at the moment, support at 144.40, resistance 145.10, further resistance 145.80, support 143.70. Dollar yen hugging the 107 level, a bit sliding at the moment. Resistance, strong resistance is at 107.65. This level cushioned the pair before the big fall. Support, well, 106.10 and 105.50. Also watch out for 105. Dollar CAD, we're seeing the weakness of commodity currencies, of oil, of the Canadian dollar, moving above 128.30. Still works as weak supports. Resistance 129.30, 130. Support, stronger support at 127.50. Aussie dollar we already talked about, and the Kiwi dollar a bit getting carried away after the Aussie. 68.50 the current level, 68.20 support, resistance 69.50. Okay, then the non-farm payrolls, drum roll. In the wrap-up for today, we have more or less more of the same. Okay, so jobs, we're expecting 203,000 jobs gained after 215 last time. If the range is between 170 and 230, my expectation is that all the focus will be on earnings. Average hourly earnings, wages expected to repeat last time, 0.3 month over month, 2.3 year over year. This is the bigger focus, unless we have a huge negative surprise or positive surprise in the headline figure. Also watch out for the participation rate and other figures. I see the current bias as dollar positive. If the report is okay or even almost okay, it could trigger more dollar buying. It needs to be really bad for a dollar sell-off, especially against the yen, and it needs to be really good for some huge rally. Anyway, the bias is currently pro-dollar, so a good enough report means more dollar buying as I see it. Okay, that's the trend. The expectations haven't changed since last week. Anyway, other figures today, retail PMI at 8 and 10 minutes. An important event for Canada, of course, the Canadian jobs report at 12:30 GMT. No big changes are expected there. The Canadian dollar remains vulnerable. It would need a strong jobs report in order to recover. And also watch out if you're trading the Canadian dollar, the IV PMI. So it's Jobs Friday. In the wrap-up for today, again, the trend remains pro-dollar. Watch out. Be careful with the NFP. Sometimes technical levels are broken, only to be re-respected afterwards. It's crazy. Liquidity suddenly disappears just before the event. I would suggest not trading before the event, waiting for the actual result, and then understanding what's going on and going with the trend. Okay, before we move to the preview for next week, US dollar is a Forex number different. Different than the dollar index. Okay, thanks for that clarification. Yeah, Fabian said that. ADP missed, so NFP can come down lower. Yeah, but we did have a better than expected ISM non-manufacturing PMI, so that's why I think it's expectations are more or less balanced. Okay, and yeah, it's going to be a chop fest in the NFP. Okay, now let's do the preview for next week. This is the preview. This is the preview for the week of May 9th to May 13th. It's not going to be as busy as this week. Sorry to disappoint. Doesn't mean no action. We've seen weeks with few indicators, but lots of action. First of all, before the week opens, we have the Chinese trade balance. We're looking for the level of exports and level of imports more than anything else. More economic activity, good for the world, less worse for the world. On Monday, we have Eurogroup meetings. The Greek story is still not at the forefront of news, but it's becoming more and more important. Still no deal for Greece, mostly because the IMF and the European Commission or Germany are at loggerheads more than anything Greece does. And Tuesday, we have another jobs figure from the Fed, the JOLTS job openings, sort of complementary to the NFP, but looking at the month of March, not the month of April like today. On Wednesday, we have crude oil inventories, as always. It could get more attention on a lighter calendar. And on Thursday, we have the UK rate decision. Of course, no changes expected before the EU referendum. But it's still an important event because we do have the minutes and perhaps fresh forecasts. On Friday, we have the German GDP. Know how the biggest economy in Europe is doing. And lots of US figures, retail sales, PPI, and consumer sentiment, all concentrated on Friday. So a week that begins relatively slowly explodes on Friday. The focus, I think, There is a chance that Greece will steal the show next week, but I'm not sure. Political events will also have an impact. And on Friday, it's all about the United States once again. Okay, so that's the preview for next week's events. Wish everybody a safe and successful day in the markets today with the non-farm payrolls. Remember, if you're not sure, you don't understand what's going on, no need to trade the event. The market will always provide more opportunities. Okay, so wishing everybody a happy Friday, successful day in markets, and a great weekend. It's almost summer in the Northern Hemisphere, so enjoy. So that's it. See you on Monday. Thanks and bye-bye.